What's up, guys? There was a congressional hearing on crypto about like 8, 9 days ago. I thought it was like ESPN. It was a game. I watched the highlights. It was awesome. I really want to share it with you guys. So let's check it out. Yo, this guy right here is like Steph Curry. He's the CEO of Bitfury, artificial intelligence for Bitcoin. XLM was there. Dang it, I sold all my XLM. There was FTX was there as well. And also the CEO of Paxos was there, which is a stablecoin. I believe they support Binance stablecoin. So let's get into it.
The topic is an important one for anyone who cares about American competitiveness in the financial services sector.
Right here, I live in America.
Financial ecosystem that empowers users over bank CEOs and other powerful central decision makers, and the next iteration of the internet in which individuals are able not only to read information and write content, but also to own a piece.
Pretty much everyone who wants to give power to CEOs and banks, and who cares about internet and computer usage. Everybody.
Of the networks themselves.
This doesn't seem like a new
AOC.
financial system per se, but really an extension or perhaps expansion of our present one.
Well, I would disagree with that. I think.
All right, I know I'm blocking the name. He's the CEO of Circle, which is Coinbase and USDC, the stablecoin USDC.
What I believe we're seeing is a new open infrastructure layer on the internet, a missing infrastructure layer of the internet that is designed around value exchange and economic coordination, that is rooted in immutable data, the ability to interact with counterparties in a very, very safe way that hasn't existed before on the internet. And really, many of the efficiencies that the internet brings in terms of moving information brought into moving value, but also with greater degrees of security than are often offered to the existing financial system. So I really do believe we're building a new global economic infrastructure layer.
Basically, he's saying, no, AOC, the old stuff that you're comparing to us is tampered with. You know, it's not immutable, and also it's not efficient. Basically, he mic dropped and just went on.
In your view, is additional guidance defining clear rules of the road for investors and market participants needed at this time?
Thank you for the question. We believe this is a very important area of focus for the SEC and this committee. We do agree that the laws are clear. However, existing laws, regulation, and legal precedent make
Do you agree the laws are clear? No, the laws are not clear. Playing politics. Good job, Mrs. Haas. Good job.
it clear that blockchain tokens are not securities. So we believe that the law clearly shows that blockchain-based digital assets are one of two things: either a new form of digital property or a new way to record ownership, as Brian Brooks spoke earlier about. We do believe that clarity is needed because these are new assets. It's a new way of transacting with these new protocols that we spoke about, and I think it would benefit all of us in the ecosystem to have agreed upon definitions.
I think from the standpoint of what's available in the market today, one of the things that we need to do better in this industry, and I think we're working in that direction, is much like the early days of the web, we need to focus on consumer-oriented products that have a lot of information about the challenges and also brings the person through from a literacy standpoint, so they understand. You look at user experience.
That's what my YouTube channel is for. We don't need that.
You look at UX design. All of these things are really, really important. And as we saw in the early days of the web, it happened. It came together. We became better at educating the audience about what's available and what's out there. The nice thing about blockchain is you have immutability. You have records that are out there that can't be changed. This information is already leveraged by Chainalysis, for example, and Elliptic to demonstrate the different things that are happening on chain. And I think it allows us the opportunity to create a lot more foundational efforts with respect to user experience and focus on these consumer protection issues that you're talking about.
All right, she just lost a couple of senators there. She said on-chain. That's probably just threw them all off.
One of the really innovative
Yo, this guy, 29-year-old multi-billionaire. I think he's like the youngest billionaire out there. CEO of FTX.
properties of cryptocurrency markets are 24/7 risk monitoring engines. We do not have overnight risk or weekend risk or holiday risk in the same way traditional assets do, which allow risk.
Boom, he took a swipe at Robinhood and Webull and pretty much any traditional finance platform, probably even Fidelity. FTX, man, bringing the heat, bringing the heat.
Risk monitoring and de-risking of positions in real time to help mitigate volatility. We've been operating for a number of years with billions of dollars of open interest. We've never had customer losses, clawbacks, or anything.
Not yet, just a matter of time. They will, they will. He's flicking his pen a lot. He's a little bit nervous. 29 years old, he's doing pretty well.
Like that, even going through periods of large movements in both directions. We store collateral from our users in a way which is not always done in the traditional financial ecosystem to backstop positions. And the last thing that I'll say is if you look at what precipitated some of the 2008 financial crisis, you saw a number of bilateral, bespoke, non-reported transactions happening between financial counterparties, which then got repackaged and re-leveraged again.
Okay, he used a lot of complex words there for the senators. Basically, 2008, a lot of ish went down. People just, not being clear on what the investment package was, and they resold it. And even though it was a horrible investment, people ate it up.
and again and again, such that no one knew how much risk was in that system until it all fell apart. If you compare that to what happens on FTX or other major cryptocurrency venues today, there's complete transparency about the full open interest. There's complete transparency about the positions that are held. There's a robust, consistent risk framework applied, and we're excited to work
Give this man a couple $1 billion. Wait, we already did.
with the CFTC on our U.S. licensed and regulated venue to bring a lot of this to U.S. customers as well.
As digital assets become more common in the global marketplace, with the total digital asset market reaching almost $3 trillion, as Ranking Member McHenry just said, how do we ensure the U.S. dollar remains a reserve currency?
Yo, this one, guys, is crazy. How do we keep the power of the U.S. dollars? Watch this answer.
Well, Mr. Lukemeyer, it's terrific to see you again, and I'd give you a couple of thoughts on that important question.
Does he look like a younger Danny Tanner to you from Full House? Or is it just me? It might just be me.
One is, if we start with stable coins before we talk about other crypto assets, I've said for a long time that the secular reduction in dollar holdings as a percentage of global central bank holdings is alarming. And this has been going on for more than 10 years at this point. So dollars as a share of the European Central Bank, the Japanese Central Bank, et cetera, has shrunk from 80+% to more like 60+% in a short amount of time.
Okay, I did not know that. Did you guys know that? Basically, he's saying our powers are already diminishing. We don't have much money in the central banking currency reserve.
What that tells me is that in the future, with the rise of China and other major economies, the US dollar can't take its primacy for granted, and we need to start thinking about competing on utility, on features, not just based on a post-World War II monetary system that we could take for granted for the last 2 generations.
Yo, he just like backslapped the whole financial industry like in the face. Like the Fed's pretty much like, well, pal, you guys aren't providing much utility. You guys need to turn it into an NFT.
And that's one of the reasons that I've been such a supporter of internet-enabled dollars, which allow us to compete on features, not only on history. I think that's really critically important. The second thing I would tell you is, as we enter year 11 or 12 of a highly inflationary environment, after all, we've been printing enormous numbers of new dollars since the financial crisis, there will come a time, gradually then suddenly, when the attractiveness of the dollar relative to other currencies could change. One of the benefits of the crypto economy is that it creates some counter incentives on the part of the Fed to do that kind of policy, because people will flee to other kinds of assets. And that sort of market competition is something that I think will ultimately shore up our monetary policy and keep the dollar where it rightfully ought to be, which is as the dominant reserve currency it's been for all of our lives.
Yo, you need to go watch that back like 5 times. He said, I don't know if he's practiced this or it just came out flowing. It didn't look like he looked at his piece of paper. This guy knows what the hell he's talking about. Pretty much just basically outlaid how horrible we've been doing by printing money for the last 11, 12 years. And instead of fleeing to other countries where they are allowing adoption of stablecoins, and he's going to get into it, we should have one here in America.
You talk about the difference between a stablecoin versus a central bank digital currency, and what advantages does a stablecoin offer that a digital dollar, say at the Fed, would not be able to offer?
Thank you, Congressman Barr. I'm happy to. I think the first difference is that stablecoins are operational and growing in the market today, and they're built on an open internet technology model. So when we think about all of the things that we've seen built on the open internet, on these open protocols and networks, whether it's ubiquitous information exchange, communications, interaction around the world, that same open internet model is the foundation for stablecoins. And so I think that's a fundamental difference. A CBDC, which is a concept right now, it's not operational, would very likely be a very closed loop technology that's tightly administered and run by the government, and would unlikely be accessible in the same way that these open networks are accessible. And so I think that's a critical difference. But I would come back to the most important, which is that most payment system innovations in the world have been driven by the private sector. And I think what's taking place today with digital currency is no different.
Yes, give the power back to the people. He's saying that the foundation for stablecoins is the same concept of internet that's been able to build robustly through everyone chipping in. But if it's a closed system where the feds control it, let's say they have 2 node operators, who would trust that? I don't know. Not saying they're going to have 2 nodes, but he's just saying don't be like that. If you're going to have a Fed or digital dollar, make it open.
Can you talk about some of the negative consequences that could happen if we take a heavy-handed approach to regulating this developing technology?
Well, I come back to Mr. Vargas's question a second ago, which I think is the right way to answer your question. Mr. Vargas asked the question of people have the potential to lose a lot of money. These things are volatile, they're risky. How do we protect them from those kinds of issues? There are 2 ways of answering that. One is to prevent as many people as possible from accessing this amazing technology. For example, the way the current legal regime works is certain kinds of assets can only be purchased by accredited investors, meaning rich people. So the only people who can get rich on this are people who are already rich. That'd be one way of protecting people from losing money, is to make sure that only the richest can access it. Another way of addressing it would be to make it safer the way that we made equities safer 40 years ago, right? We created mutual funds, diversification, sector funds, and other things that make it easier for regular Americans from places like my hometown in Colorado to buy equities without having to be stock experts. Strangely, in the US, we've refused to do that so far. So we don't allow crypto mutual funds. We don't allow people to diversify the way that they do in Canada, Germany, Singapore, the United Arab Emirates, and a series of other regulated economies around the world. So I would argue the way to win is to bring more people into the system more safely, not to keep them out at their own peril.
I'm not going to comment on that. He just did a mic drop there. Basically, we are behind the 8 ball here. We are falling behind.
Represent the South Bronx, which is often said to be the poorest congressional district
Oh, I like
in
this
America.
dude.
And the
Like this
greatest
dude.
concern to me are the use cases of crypto that would improve the lives of the people of the South Bronx. I represent a heavy population of
South
immigrants
Bronx, J-Lo.
who often pay predatory fees in order to send remittances to their loved ones abroad. So what can crypto, blockchain, Web3 do for that Dominican immigrant in the South Bronx who is burdened by remittance fees that she cannot afford? How much more affordably and quickly can the crypto economy facilitate remittances? Mr. Cascarilla, if you could take that question and please be specific.
All right, this guy's just pretty much all for crypto. Like, number one, he's young, right? He gets it. He's in New York, number one financial center in the planet, maybe. And he's just serving up on a platter saying, hey, here, our guys are getting crushed by remittance fees, just fees from banks and like servicing companies. How will crypto help that? He's basically serving up a home run. And this guy better knock it out of the park.
Yes, thank you for the question. I think this is a really important element of the technology, which again is that it's open to anybody. You don't need to have a bank account. You don't need to, in fact, rely on any intermediary. So somebody who's an immigrant and wants to send a remittance to a family member in another country is able to do that. And there's ways to do it with both crypto and to do it with a stable coin. And all you need to do is download a wallet, and then you can send it to somebody else anywhere in the world. And so this is a really powerful tool for democratization of access, especially for those who have difficulty getting bank accounts. There's no minimum fees, there's no minimum balances, there's no check cashing fees that are part of this technology. And you can do it in some cases for a penny or less.
One big
He did okay. Not a bad job. Not bad.
coin transaction, a single purchase, sale, or transfer uses the same amount of electricity as the typical US household uses in more than a month. And so this is really outstanding to me, and many folks do not know this, many Americans and folks that are talking about this issue. And so, Ms. Dixon, can you explain why for a cryptocurrency like Bitcoin that rely on proof of work model mining is such an energy intensive process?
Thank you for the question. This is a really important area, obviously, in terms of sustainability and the focus on what we do in this space. We should always be trying to do it better and much more efficiently. In Bitcoin is the proof of the way that Bitcoin consensus is achieved is through really complicated math equations. And so there's a lot of energy that's needed to be used to be able to make that happen. I know best about the consensus mechanism on Stellar.
Pump in her own
which
bags.
is the Stellar Consensus Protocol, which can be done on a very small computer, any of the ones that you have in front of you. And we had a University of London did a study on the Stellar network itself, and the network is low in terms of energy consumption. It's around 0.00022 kilowatts per hour for each transaction. That's less than a transaction for Visa. So that's a really important comparison for us all to think about. So not every consensus mechanism is proof of work or proof of stake. Again, there are many, many different ones out there, and depending on the mechanism, it depends on the energy consumption. But it's definitely important for us to be able to try to do this better, more efficiently, and to consider the sustainability concerns around it.
Yo, good for her. Pumping XLM. I used to have XLM, so did all. Well, there you guys have it. I'm just glad there's much smarter people testifying in front of Congress trying to push this space forward. I mean, Mr. Brooks, hands down, Steph Curry of the game, MVP. This was a 5-hour hearing. There's people that go over this and they watch this thing over and over. This is just the highlights of it. They go pretty deep into a lot of different subjects. I didn't watch the full 5 hours, but you can find it on YouTube, I'm sure. Really, what came out of it is absolutely nothing. It's just a congressional hearing, so they heard him out, and there's a small group and panel that's going to make decisions for us, a very small group. But it doesn't really matter because, like Mr. Brooks said, it's already happening over shores. Now, I'm not saying I'm moving to another country, but you can't stop this train. DeFi, crypto, it's already moving. It's either up for the US to catch up, put parameters for it, let people get in, or just get left in the dust. Hopefully you guys had fun. Hopefully you learned a lot. We're going to do a little bit more of these things in the future because it's fun for me and I like documenting stuff I like to do. So make sure you subscribe, follow along, because we're going to be talking about our full 2022 investment portfolio plan for crypto, also, boring index funds and bonds and stocks, and also real estate as well. Stay healthy, stay fire, catch you next one. Peace.